So far, we were discussing on all these things, right? A fast glance of the last session because it's after a lengthy gap, we are just catching up the rest of the things. So we were just discussing about the brief points, the basics of 2013 Act. What are the highlights of the Act? You remember? Okay, regarding the women director, whistleblowers, and whistleblower just came to the Shiva Shankarana as a owner, as cell. You know about the Satyan scam. So regarding the 2G scam, probably might be aware. So he was the whistleblower at that time. Okay. Uh, in one of the YouTube shorts I saw, he was the whistleblower, but he is the first one to pay the highest penalty in the scam. Okay. So if possible, you can please make a note. You can have a. Recently, has given a lot of interviews are going on. How you fall down, which means how you fell down. How you fell down, like he got almost bankrupted. After the bankruptcy, how he came again. So there are so much of stories going on. You can just refer that one. Uh, about the resident director, about the woman director, and hope you remember this something called as class action suit. If one person is affected and many persons are also affected with the same action, then they can file a suit, which is called as class action suit. Okay. And regarding the applicability, I asked you to refer section number 1. Did you from the Bar Act? If you haven't referred now, please, it's a very serious issue. You have to refer this one. Section 1 deals with scope, extent, title, and commencement from where it is applicable, for whom it is applicable. Along with that, not only for whom it is applicable, also not to whom it is applicable. So in that case, if you go there, you can refer that for insurance, banking, electricity, and special act, except some inconsistency are there. How far that act is applicable and Companies Act 2013 is applicable will be given. So you have to check on this. And some important definitions. Okay. These are all covered under section 2. You will call this as section 2, clause 91, section 2, clause 55. Then we came across all these characteristics. Then we were discussing on these cases, right? One is Lee case, one is Solomon case. I think only 2 we discussed. Any other things we discussed? Only 2. Okay. Actually, these are all the normal points. When we go for these 16 characteristics, one and another is interconnected. Let me go like this way. If you talk about separate legal entity, we see it as a separate person. Company exists only in the eyes of law. We say that it exists only in the eyes of law, which means it's a legal entity. You cannot see a person, you cannot touch a person, but you can feel the person. Okay, so only it exists in the eyes of law. Okay. So once it is incorporated, see, I'm going in this order. First, it says it's incorporated, it becomes a separate legal entity. So once it's incorporated, when we say separate legal entity, it can have its own separate management, it can have its own property, okay, and it will have its corporate personality. We can talk about this point where I'll use curly brackets. Perpetual succession, which means there is no death, okay, and even though there is perpetual succession, if everybody feels like the company can be terminated, closed, we'll not use the term called as closed or termination as a general word. Instead, we use a word called as winding up. Okay, liquidation. Okay, liquidation is a process. So I just want to strike out. Actually, liquidation, you can use it, but it's a process only. We can call it as winding up, dissolves. A company will be dissolved. Okay, dissolved. Some spelling. Okay, dissolved. So even though it's long living, but still there is a end to a company. Okay. Nobody can compel. So it's a voluntary association. Obviously, you're doing business. So business intention is to make profit. And when we say separate, yes, you have the separate identity where you have the capacity to sue and be sued. And apart from this, we have this artificial person because it exists only in the eyes of law. Commons will be there, transferability of shares, and all these extra points. Can please have a note. So if you just think this as 15 points or 16 points, you look like as if you have to memorize all this. Don't do that. Everything is interlinked, okay? Separate legal entity or independent corporate existence. See, I'm not giving in paras. These are the bullet points where you can make a note of. In the case it's asked in the exam, you can use all these points. See, when you say separate, we say it can open its bank account in its own name. Okay. When the company is incorporated, we'll get something called as certificate of incorporation, and that certificate of incorporation will include the PAN number, TAN number, along with corporate identity number called as SIN number. So it will have its own identity. That's what we say it's separate legal identity. It's actually the striking feature. When we say it's a company, this becomes a striking feature because when we talk about partnership form, no, it's not being separate. Partners and business are the same. But when we talk about it's a company, it becomes a striking feature, or what we call this as an outstanding feature. Actually, these topics are not there in CA material. In fact, to say so, these topics are not in BAR Act also. It's through judgment only we get it. Okay. It's a unique character. It can have its own property, same rights and powers. What are the, as a human being, what are the powers and rights, liabilities, what I have, the same thing happens. Okay. One example I could go for. If I walk in the road, how many have, okay, don't take it personal, just colloquially we'll discuss. How many have this habit of throwing dust on the road? Some you just crush some paper. Probably if you're boarding and if you're got down from the bus and you have a bus ticket, what do you do? Immediately, we just crush it in some fingers or in hand and we throw it. Okay. And you want to be, from today onwards, you want to be a very genuine citizen. Okay, you don't want to litter the road. What you do? You put it in the pocket. And that will be there for another 1 year. Okay, that's different. Okay, so you put it in your pocket, you put it in your purse. So one day I remember I opened my pouch. I can find all the chocolate papers. It was not like my pouch which is carrying cash. It looks like a purse, as if it's looking like a dustbin. Okay, I was putting all these things inside. Inside once if I open, I'm getting all these chocolate papers because while we go in the car or long drive, we feel like chewing something and going. Okay, same as human being, what are the rights, what are the powers, what are the duties, what are the liabilities we have? It's applicable to the company also. Again, you may ask me, how? It's not going to litter? No, it's not going to litter. But obviously, for like one example, it's going to pollute. And in that case, we have something called as a citizen, I have the responsibility. As a corporate, it also has the responsibility. Yes, can you please give the expansion for this three alphabets? Corporate, social, small. So as a corporate, it also has a responsibility towards the society. Corporate social responsibility. This is a beautiful line. Probably at one period of time, CA students were getting often this question, clothed with legal personality. Even though it's important or anything like that, not for the exam point of view, the concept is important. I would request you to highlight this word clothed. When we say clothed with legal personality, probably in forthcoming pages we'll be discussing one doctrine where it is called as doctrine of lifting of corporate veil, because it is clothed with legal personality. Because what? It's once incorporated, it becomes a legal person. Because now it has become a legal person, it is wearing a mask. So protection, it's a shield like. Okay. What type of a cloth? Legal person. It's a separate person cloth. And that doctrine will be discussing that that mask will be lifted and will check whether that's the original person or what. Okay. So that's the process. It can enter into contracts, it can open bank accounts. Yes, it is distinct and separate from its members, and it can raise loans, incur liabilities, everything it can do. No marriage, so no divorce. Okay. Okay. So if you ask a company to write an exam, CA exam, it will sit and study, but it cannot write. Okay, okay, that's different. Probably, as your accountants now, you might be knowing, a company cannot do an audit, which means a company, in the sense, company's partners can do. An audit firm means the separate individual auditors can do, but not in the company's name directly. Okay, so only the individuals can do an audit. Okay. LLP can be formed. Yes, the partners of the LLP, they can do the audit. Company can be formed as an audit firm, but still the company cannot do the audit. On behalf of the company, CA or CMA or CS has to do the audit. Okay. Like an individual, it can do all the work, but except a few. Okay. So also, if possible, I'm not going in detail, you can refer this case law in detail, maybe later. Diamond Company Limited versus this Continental Tire Rubber Company Limited. It is not about what case it is. Usually we'll go with respect to some, if a judgment is given. Actually, if you go for a judgment, it goes for runs for pages and pages. Probably it goes for 10 pages, 12 pages, 50 pages, sometimes 200 pages also. Okay. Last, that verdict or judgment, that sentence will be given in the last page, but how or why they have arrived to the judgment will be explained in all the pages. Okay. Last 2 or 3 lines will be completely talking about the penalty or compensation or damages. But the first and 4 more pages, it will start how it happened and etc. and etc. It will go for pages and pages, and in that they have just grabbed some lines from this Lord such Chief Justice. Okay, so Lord Reading, his name is Reading. Okay, his name is Reading. Okay, from his words, which means during the judgment, they'll give some suggestions. And obviously, you might be knowing they are the lawmakers. Okay. Even though we have these 4 organs, legislative organ, executive organ, and other things, even though we talk about legislative organ, there'll be a committee form, there'll be a bill drafter, then it goes for Lok Sabha and Rajya Sabha, then it gets president as an everything, then comes to a act. Even though all these things are there, when this judge, the Chief Justice or whoever it is, he goes to his position, he makes any words that becomes law. We call this as judicial law because some judgment has happened. Depending on those cases, we have to grab some words. From this only, he has given that these words, probably only one I'll discuss in detail, is a living thing. Okay, probably you go for a second standard and third standard. Living thing, non-living thing. Okay, it's a very easy, simple definition. What it is, not living being, it's a living thing. Okay. Uh, with a separate existence, which cannot be swept away as a technicality. You technically say it's just a company. Okay. You cannot say it's non-living thing. Okay. It's still a living thing. May not be a living being, but still a living thing. Because technically we are using or we are incorporating a company, we cannot say it's a non-living thing. Okay. It is not a mere name. Please highlight this term. Mere means just casually we are using. Okay. I say you're my friend. Okay. Obviously, please accept my friend request. Even though I merely say I may not have met you before, or we say Namala friend pa. We merely say, okay. So it's not like a mere name. Probably the next day you come, I may not be seeing it. I may not remember also. This what we say, the strained relationship, strained friends like. It's not a mere name or a mask or a cloak or device to conceal the identity. See, I want to relate this word with clothing. See, we did already later, right? And it is not suggested the company was formed for any dishonest or fraudulent purpose. It is a legal body, please highlight, legal body, clothed with the form prescribed by the legislation. Once a company is incorporated, we strongly believe, and there is no doubt can be raised whether it is formed or not. Because we have the certificate of incorporation, we have the SIN number. But what the judge will do is, he will apply this doctrine called as doctrine of lifting of corporate veil, and he will veil lift the mask, saying that it is not a legal person. We consider as if the company is not incorporated. What will happen? So this is how it goes. Okay. So a person and subscriber. Subscribers means those who have subscribed to the memorandum of association are different. Even members, even though they have formed the company, they are different and company is different. Members can enter into contracts. Creditors can sue for the debts of the company because it can raise incur liabilities. Okay. Property, who's the owner? Company is the owner. Probably can refer for this case whether a member, probably I am giving the money to the company. Please just, I'm not going for the complete accounting transaction at all. Just colloquially, I'm discussing. Myself, Y, yourself, X. Okay, we both are investing in a company, each 1 lakh rupee. So for total 2 lakh rupee capital amount. Where you post this in the balance sheet? Liability side. Whether it's a company or whether it's a firm or whatever it is, you post it in the liability side, which means the company is liable for returning this 2 lakh. This is what we have learned. Okay. But now what happens is, with this 2 lakh, what is the company doing? The company is buying a property. Okay. Please don't ask me whether all the property, whether all the 2 lakhs is used for the property. Don't ask those genuine questions. Okay. Leave off that side. I'm just saying, with this 2 lakh, a property is bought. Whose property is now? This is company's property. Okay. This is a company's money. Oh, yo, this is company's money. Don't get confused. Whose money is this? See, I have posted in the balance sheet saying I'm incurred to pay this 2 lakh as return. Okay. If the company is facing any legal issues or if the company is bankrupt, how it's going to pay? It's there in the balance sheet as a figure. So whose money is this? Don't get confused. Whose money? This is company's money. It is having a liability. Okay. You want to buy a property. You are buying a property, incurring a loan from the bank. Whose money is this? Even though bank has given the money, this is your money. Okay. Obviously, you have to return the money. Okay. So what the bank will do is it will ask for some security, collateral. Okay, it will go for hypothecation or collateral or whatever. As pledging, here we'll use a term called as charge creation. You might have heard of this term. Usually will not use this is the general word, pledging, mortgage, or hypothecation. All these words are there, but still will not use this word. In general, we'll use the word called as charge creation, which is collateral creating, security creation. So you can just refer this case law a bit later. Actually, these are basics for today is also basic class only. I'm not going in depth directly or content. Probably CA you may expect one question on this, and CMA also you may expect one question. We have lot of things to do in the future. Probably with respect to buyback or prospectus, we have lot of things over there. It's all basics only. Perpetual succession. A company never dies. See, the word is a beautiful word. They're not using will not die or something. Never dies means there's no death, something like that is something associated to human being. Okay, having all these nervous system, etc., etc. So it will never die. Members may come and go, but the company goes on forever. No death because it's a legal entity. Even an atom bomb cannot destroy a company because all the directors have gone for a board meeting. See, all these directors are lucky they can go for a board meeting in some other country. Nice, no? Okay. Okay. எந்த கம்பெனி சொல்லுங்க நம்மளும் ஜாயின் பண்ணுவோம். They can go for some other country, they can have a board meeting and come back. Okay. While traveling, all the directors with some flight crash or something, all the directors passed away. Okay. Now the question: is the company existing? Yes, it's existing because company is there existing in the records because it's a legal person. Even though all the members have gone away, even though all the directors have gone away, even though all the employees have gone away, the building itself has gone away, company is existing. Only way how can you close a company? Only through the records. It will go either for strike off or it will go out of the records. Okay. So you can refer these two case laws. I'll go for the next content. Limited liability. So no member is actually limited liability is not for the company, but for the member. You can please make a note of it. If you are aware, then it's fine. Don't think the limited liability is for the company. Limited liability is for the members of the company. Members be shareholders of the company. Okay, before I continue, we just I bring it to your knowledge. We have these terms. One is what you call as shareholders. Okay, hope I'm not too fast. Speed is manageable, right? One is we use the term shareholders. We use the term members. We use the term subscribers. We use the term contributors. Okay, most of the time we colloquially interchange all the terms. Okay, even when you become a professional, CA or CMA or CS, we colloquially interchange. But when you come for the provisions, you have to be very careful. Very simple. When we talk about shareholders, holding shares in a company. I'm holding share in a company. I'll be called as a shareholder. Member, there is a record to be maintained, which is called as register of members book. There is so many registers need to be maintained, like register of debentures, register of charge. So many registers has to be maintained. This one register is called as register of members, where once you become a shareholder, once you become a subscriber, name will be recorded. Against your name, all the details will be there, your address and how many shares you hold, etc. If your name is not there, you are not a member. For example, for this one, dividend will be given to a member, not to a shareholder. Obviously, you have to have all the things. That's different. When you go for the dividend provisions, probably when you go for the dividend provisions, we'll discuss dividend. Dividend for CMA you'll learn in the final level, but I'm just giving an idea. Even though you're going to learn in the final level, you need this knowledge. If you go for the provisions of the dividend, you'll find that dividend will be given to the member. Member is a person, obviously he has to hold the shares because it will be percentage of the shares only. So if you talk about the member, who's a member? He has in his name is there in the record. Okay, which means what's the record called as? register of members letter. Okay. Subscriber is a person who has subscribed the memorandum of association, which means he has given the declaration saying that I, with along other persons, will join for forming this company. Okay. Sorry, pa? No, no, no. Subscribers is the person whose names are there in the MOA. Okay, for example, X, Y, and Z put together, they are forming a company, three persons. After forming the company, probably I'll particularly have a date, 8th July. This is the date where sin has arrived. Okay, which means certificate of incorporation has arrived. 7th July, Z passed away. Okay, still the company is now incorporated. 7th July, Z has passed away. Probably this may not be in the records of the registrar, MCA. 8th July, it says company is incorporated. Who has incorporated the company? X, Y, and Z. Is it okay? Probably you may feel like something illogical, but this is a fact. The fact is a very simple fact. Once a corporate number has come, certificate of incorporation has been given, you get the SIN number, the company is incorporated. There is no doubt can be raised. If you want to do any fraud or something like that, probably I may go in this way. Probably when they are going for subscribing the MOA, there will be a particular date when they have signed, right? There will be a particular date when they have signed. At that date, whether Z was there or not, alive or not. Okay, probably you cannot say he was alive after that only he died. You cannot say that way. So that may be, I guess, probably it will not go in this way. But in case in future any fraud happens, it goes to the court of law, then goes to the tribunal, then this may all be questioned. This is what you call as doctrine of lifting of corporate wealth. If anybody raises a case, probably there is a misunderstanding between X and Y, and this some fraud thing has happened. Okay, so if X says this company is formed because of these things, then the lifting will be done. Doctrine of lifting of corporate will be done. Okay. அதனால கொஞ்சம் கத்துக்கணும் நிறைய. So I'm stopping here. Shareholder means who is having shares. Member means whose name is there in the register of members book. Subscriber means who has subscribed saying that I will buy at least one share so that the company will be formed and his name will be there in MOA. And what law says is, if you are a subscriber to the memorandum of association, even though your name is not there in the ROM, you become a member. Please try to understand. Even though your name is not there in the ROM, Register of Members book, you will be called as a member. This term is what you call as deemed member. This term is what you call as a deemed member. And contributories, see, if it is a company having share capital, you'll call that person as shareholder. If there is no share capital company, means you'll call that person as contributor. Actually, contributor is a wider term. In all the cases, you can use it. Okay, so now I come here. Limited liability is for whom? Not for the company, but for the member. Okay. So usually I go with the simple example. If with respect to share capital, company having share capital, if there is a company having share capital and the share is rupees 10 rupees face value, or what you call is nominal value for one share. And what is the liability for a member then? He subscribed 10 rupees. He has already paid 7 rupees. So what is the liability? Remaining 3 rupees, which means we say limited liability when it is limited for unpaid value only. Okay. So I'll come here. Limited by shares to the extent of unpaid amount. If we go for limited by guarantee, probably during the wind up or some adjustment may be needed in the future. In that case, that member might have given promise for extra 2 rupees. Not for all the situations, during the wind up alone. So this extra 2 rupees will be carried over. It will not be called for. So probably you might be knowing this term, first call money, second call money, etc. Okay, so this 2 rupees will not be called for. Only when there is a need, it will be called for. In case a company is having okay, I'm talking about company now. In case a company is having a liability of 4 rupees, how much will be taken from the member now? There is only 4 rupees liability for the company, and there is only one member. For example, I'm saying, then how much will be taken from this company for this member? If it is limited by shares, only 3 rupees. If it is limited by guarantee, even though 3 plus 2, it will take only 1 rupees because 1 rupee is needed. In case if it is not 4 rupees, if it is 6 rupees, it cannot take 6 rupees from the member. How much it can take? 3 plus 2, because how much guarantee I have given? That's it. Okay. Unlimited means whole liability. So most of the company, if you are incorporating, will not go as limited liability, unlimited liability. Most of the cases we go for limited liability, but law says in some situations it becomes unlimited. If you find that XYZ has incorporated and they have done some fraud, like it becomes unlimited. For the directors, it becomes unlimited. Probably they have to go for if it is a private company, we need to have minimum 2 subscribers. Public, we need to have minimum 7 subscribers. If this 7 falls below 7, okay, within 6 months they have to bring one member, but his name will not be there in MOE. Okay, please try to understand. They are not saying 7 subscribers; they are saying 7 members. Subscriber means his name will be there. Even though XYZ has incorporated the company, all the XYZ has passed away, whose name will be there in the subscribers list? X, Y, and Z only will be there. Because this is the document mainly needed for incorporating a company. So their name will not never be changed at all. So when we say it's 2, when we say it's 7, this is about 2 members and 7 members. These are basics. Okay. Separate property is capable of to own, to enjoy, to dispose in its own name. Includes, it can mortgage also, it can assign to somebody, it can convey, it can deal or whatever it is. It is the owner for its capital and also its assets. Shareholders are not several or joint owners. Please highlight this. Shareholders are not the several or joint owners because they cannot split over. Probably the company is now bankrupt. Definitely they'll not get it. They want to go for liquidation. In that case, if they want to take over the property, then the process is totally different. Like, you cannot go and say it's my property. I only gave the money, so you cannot say that. Okay. So we can go for this case. Transferability of shares. That's one big highlight. It's easily transferable. So XYZ bought the company having 10 shares, 10 shares, and 10 shares, going for a very small number. Just 10 shares X bought, 10 shares Y bought, and 10 shares Z bought. Okay. Now put together how many shares? This 30 shares. If Z wants to step out of the company, yes, he can go away, but that will not happen usually in the case of partnership firm easily. It happens in partnership firm also, but not easily. If Z wants to step out of the company, yes, he can step out, he can sell the shares to anybody and go. There is only one thing you have to make a note. If it is a private company, if Z wants to go out, first Z has to approach X and Y only whether they are interested in buying the shares. Okay, probably this 10 shares of Z. If he wants to go out of the company, then he has to first approach whom? X and Y. Because it's a private company. We call this a closely held company. The private company, the other name we use it is closely held. It's within happening. Okay, within them. So closely held company. Is it okay? Section 44 says the shares, debentures, and other interest of any member shall be, what's the nature? Property will be movable in nature. And it's transferable in the manner provided by AOA. Even though it's easily transferable, you have to check the articles of association. Liquidity to the investor is there because whenever I have the shares in a company, I want to sell it and go, yes, it can be easily done. And nowadays it's very easy, you can done it very easily. And the company is still stable. See, XYZ goes away. Probably X goes away, Y goes away, and Z goes away. But still the company is there, right? The company is stable. Only thing, if there is a change in the directorship, who is going to run the company, that may be a question mark. Okay, that's very internal. We are going for the general cases only. If you talk very in depth of one particular company, there may be many reasons how the company will be run by the new directors, how they will know about the new business. That's very specific. We are not going for the specific thing. We are going, or we are talking in general, very general provisions. Then we'll go for artificial legal person. Yes, you know all this legal process, no national birth, flouted the rights of individuals, capacity to and civil. Yes, it's beautiful. Non-eligible to sent to jail. If you talk about the penalty provisions, it may look like seems to be funny, but this is a concept. What do you talk about the penalty provisions, punishment in case of a crime? Two types of crime we have. There's not crime. Two types of penalty we have. One is don't write it as jail. That's a different term. Imprisonment. Another one, fine, monetary value. Whenever we talk about Companies Act, two penalty will be levied. One will be levied to the company. Okay, you can please make a note of this point. This is quite a very important point. Wherever you go and find the penalty provisions, penal provisions under Companies Act, one will be levied to the company and another will be levied to the directors or officers in charge. Directors or officers in default or officers in charge. Company being an artificial person, you cannot send to jail. So what will be the punishment over here for the company? It will be only fine. Okay, it will be only fine. Whereas if we go for a director or officer, we can get both imprisonment and fine. Is it okay? Okay. So it cannot take both because it's not a individual and all. See, I'll come for this point. It's a very serious point because if you go for a CA, once you finish a CA or CMA or CS, whatever the qualification is, once you finish your CA, there is something called where you declare saying that I will not be against the institute or something like that. There will be a lot of provisions. Right? That's what you call as professional ethics and all. Taking oath is somewhat equivalent to that, right? I'll not go against this taking oath along that. A company being an artificial person, it cannot take. Okay. It cannot marry, it cannot practice profession, so on. Then acts through, it's an artificial person, acts through human agency. What is human agency here? Directors, not shareholders. Directors are the agents of the company, but they are not the agents of the members. If this question is asked, you can please refer this case. Diamond Company Limited versus Continental Type Rubber Company Limited. Can we just go through these lines, please? So these are lines, beautiful lines, right? Say, can neither be loyal or disloyal. It's a beautiful line. Okay. Probably if it feels like giving dividend, it will give dividend. If it feels like giving bonus shares, it will give bonus shares. Okay, this is how it goes. Mm. And apart from corporators, it can neither have thoughts, wishes, nor intentions. Yes, definitely. It's again a beautiful line because through human agency only it acts. Yes, so this is also a beautiful line. Common seal actually before it was mandatory, but it is not mandatory now. If it has been included in articles of association, yes, you can make it mandatory. Okay. So a common seal is something we want to authenticate the document. See, if we find a letter or something like that, how do you know I have written this letter? Because my signature is over there. If my signature is not over there, some stamping or something has to be there, right? On behalf of me or some stamping has to be there. So this is what you call as the common seal. This being an artificial person, it cannot sign its own documents, but it can authenticate how? Through the human agency, through the directors. But obviously, the directors has to be given the authority. The resolution has to be passed, and the directors has to be given the authority. So, common seal is something we need to authenticate the formal acts through this one. It's a symbol of incorporation. Yes, once a company is incorporated, it can have its own common seal. It's an official signature. It's who will affix it? Officers and employees. See, during the medieval times, the ancient period, these common seal concept was there. Now it has become optional under the Companies Amendment Act 2015, not in 2013. 2013 is the act. After that, many amendments came, and 2015 is one such amendment where it says it's not mandated. If you want to have, yes, please include it. Articles of association. Okay. And in case if it is optional, means you need to have an alternate mode, right? See, optional means you need not sign or you need not authenticate. It's not that meaning, but you need to have some alternate mode where those documents has to be authorized by two directors. And if there is a whole-time company secretary, one director and company secretary. Again, the law is not exactly mentioning two directors or director and company secretary. If it is a company secretary, whole-time company secretary is there, it's mandated the director and company secretary has to fixed. Okay. So this is about the basics. Shall I go for the next one? So this is completely dealing with doctrine, corporate of lifting of corporate veil, or what in general called as corporate veil theory. So we are discussing so many things: artificial legal person, separate entity, separate legal person, incorporated assets. All these are linked with this term called as corporate veil, clothed with legal personality, wearing a mask. So when we were dealing with the Solomon versus Solomon case, actually Solomon, so you might have gone through this case. Solomon started this company along with the family members. So totally seven were there. and do actually, I think he was doing some leather business, woods and leather business. So when this company was incorporated along with the six, actually it was a well-doing company, sound-minded company, well-doing company. After some period of business, actually the company was like bankrupt. It cannot manage its assets, so you need to have to buy the get the loans and all. So this is how the case goes. And the creditors, what they will do is they will directly company. You started the company, so you give you from your assets. So you know have this concept called as limited liability. So once a company is incorporated, the person is different and the company is different. First thing, and the liability is limited for the members. So Solomon has only liability limited. Okay, so this is how the case goes. And Solomon versus Solomon case is a very beautiful case associated with this doctrine lifting of corporate veil. Actually, it's a process. Lifting of corporate veil is a process. It's not for a newly born company. If a judge, if a lawsuit is filed, if it goes to the court of law or tribunal, okay, so usually we'll say court of law, but we have here NCLT, National Company Law Tribunal and all. If it goes to the tribunal, if it goes to the court of law, the judge's first question will be how the company will be formed. The judge will think as if there is no such company. This is Solomon itself. Please try to understand. The judge assumes that this is not a separate legal entity. This is Solomon itself. So, which means Solomon is running his business, is not was. Please try to understand. Was means now it has formed a company. Judge thinks it is a company run by Solomon. It is now bankrupted. Now the creditors are defrauded. This is the case. He'll just raise a question. No, this is not the case because when Solomon was running this business, it was actually a good going business. After the company was incorporated, during some ups and downs, which was, it just went away. So, is this a mistake of Solomon? Is Solomon trying to defraud? No. Is this mistake of Solomon? No. How was the company running? Good only. So the corporate veil was lifted. Actually, it's a process. Okay, don't think it's a black mark for the company. Every company will, every cases will go for lifting of corporate veil, which means seeing that company is different. That is, company is not different from the person. Okay. So it's just a legal concept to identify whether the company is separate from its members. Looking behind the company as a legal person, which means what? We'll not treat it as a legal person, which means we are disregarding the corporate entity. We are removing the cloth, we are removing the veil, we are removing the mask. Okay. Because many are using it as a shield because we say that if I run a business bankrupts, then I have to pay with all my assets what I have. But if a company is formed, bankrupts, which who will pay? Company will pay because I have limited liability. Members have limited liability. So this is how it is. Concept, yes, which are shielded from liability connected to company's action. Company is different. I am different. So company will pay its liability. I will pay my liability. How much is my liability? 7 rupees paid. How much is my liability? 3 rupees. If the company is having 1 crore liability, what is my liability? Even though I have formed the company, 3 rupees. If a company is having 3 rupees liability, then I will pay. Okay. If the company is having 4 rupees liability, I need not pay because it's not my company. Okay. This is how it goes. Okay. So you can refer this case law. Even if we have referred Solomon versus Solomon, now you refer the Solomon case in this angle. You just try to lift the corporate veil and you just discuss in this angle. You might have watched this case law, you might have studied this case law in the sense thinking or treating this as a separate legal person. Now you just read again this case law saying that the corporate veil is lifted. You just how this process is going. Okay, just go through once again. Okay, so this process is what you call as lifting or raising, putting holes, raising. Okay, looking behind the company as a legal person, court's willingness. It is the court's willingness. It's not a mandated one. Court will be checking whether it can question its control and not its ownership. Okay, it will be thinking. Okay, can you go for this case law? And usually when we talk about this corporate veil lifting, we'll talk about two cases. One is statutory cases and another one is depending on the judicial action. What has happened behind? Judicial law. What has happened behind? When you go for statutory cases, law says you have to follow or you're abusing law. Abusing law means what you're not following. Okay, not following. This is follows from statute. What do you mean by statute? Actually, there is some spelling mistake. Statute. Okay. UT. What do you mean by statute? Law. Companies Act. Also Companies Act. Which means Companies Act, that act, this act, all that. Law. I'm not talking about act. Law. Everything will be followed. Okay. When you go for judicial decision, already might have happened in some case law and we are following that. This one character goes with enemy character. So a company is formed and that has become an enemy company. Enemy company means some war is going on. We call it as an enemy company. Alien enemy. Might have studied in Indian Contract Act. Alien enemy. In that case, how we'll define a character of the company? We'll call it as enemy character. Again, you can go for refer this case law. Next, a company is formed. Why? To protect the revenue. I need to pay so much of tax. What I do? I form another company, myself individual. I form another company. Once a company is formed, I am separate and company is separate. All the work will be done by the company. So all the profit will be shown in company's name. So who is paying the tax? Company is paying the tax, but who is enjoying? I'm enjoying. Yes, obviously I can enjoy. I can form any number of companies. That's not an at all issue. That's not illegal. But only thing is for evading tax or you want to protect the revenue, that's wrong. Okay. So this you can refer these two case laws. Then welfare legislation. Yes, this is another one beautiful law. You have to refer this bonus, payment of bonus act. Payment of bonus act is not falls under companies act. It falls under labor laws, industrial laws. What the payment of bonus act says is, if there are 20 employees in a company, you need to pay bonus. I'm not talking about bonus shares, bonus payment. Okay, from the profit. Okay, okay. Let me go for a small intro on this. If we talk about share of profit, how the shareholders get the profit? Share of profit, appropriation of profit. We call it as dividend. How the directors get the profit? That is share of profit, remuneration. Okay, managerial remuneration. Okay, how the employees get the profit? By way of bonus. Is it mandated that every company has to give the bonus? No. Only if there are 20 employees in a company. Just imagine SSA is a company. Okay. We have 19 employees. My job is to add another two more, which means I'm expanding my business. My job is to add, which means I require two more employees. Now it becomes 21. Government again இது பண்ணோம் நம்ம எம்ப்ளாயிஸ்க்கு bonus pay பண்ணோம். Obviously this will be in the owner's mind. So what I'm doing is I'm going to form another company only for the purpose of for evasion of bonus. That is evasion of welfare legislation. Actually, bonus is a welfare for them. Apart from earning the salary, earning the amount, it's a welfare for them. So gratuity, bonus, these are the things. If my intention for forming a company is only for avoiding this legal obligation or avoid paying this welfare legislation, then it's illegal. You're not faithful to your employees. That should not be done. It's a very beautiful concept. So this happened in this Associated Rubber Industries Limited. See, if you know this case law, it's happening between the workmen and the Associated Rubber Industries. Workmen of which company? Associated. See, they have the workmen union, right? Union and all with that. So workmen employed in Associated Rubber Industries Limited, they filed a case on Associated Rubber Industries Limited. Tell me whether can they file a case on them? See, when they say it's an association, workmen association, they have to register as an association. We will not say it's a separate person, we'll call as association of persons, association of individuals. Okay. Second, third or second one, fourth point. Formation of subsidiaries to act as agents, only to act as an agent. That should not be done. If holding company is doing one job, subsidiary company is doing one job, and they are just mutually understanding, that's different. Only to act as an agent if I'm forming a company, that's like defrauding. You should not do that. So this is the fourth point. And fifth point, only to prevent the fraud. Okay. Probably I would like to go for this line. This person, Horn, he's a managing director. He starts a company only to defraud his boss because he's been fired of the non or breach of employment contract. So usually you have this employment contract. After you leave from this company, you should not work like this and all. Okay. Which means the know-how and other things should not be shared. You should not go to the rival. If I'm working for an organization for some 3 years, after this 3 years, if I come outside and work for a rival concern, not a rival concern, I may be working or I may be starting my own business. What happens is all the customers may become my customers now. because I'll be because some customers might be there, for example, to go in a better way. If Bhakia madam is opening a academy, we'll now understand in a better way. Okay, she says, "What Yamuna ma'am and Sridhar sir are handling, come, I will handle it. What you're doing, you go and join over there." So what I do is this should not happen in the future because it's not the future of Singar Academy, it's the future of Yamuna and Sridhar. Okay, இதெல்லாம் பார்த்து தான் அங்க மாடு மேய்க்க போறோம். Okay, in future. Okay, not now. So what I do with Bhakia madam is I draft up agreement. That's a contract for the non-breach, which means if she is leaving Singer Academy, she will not leave. Okay, if she is leaving Singer Academy, what I'll do after leaving, she should not start her own business of the same field. Okay, she can go and work somewhere. If she is working somewhere with the same designation, she should not share her. All these things will happen. Okay, conflict of interest will be there. That's what they say. So this person, he started a company and he's defrauding his boss after fired. Even though after fired, it's a breach of employment contract. It means why he's doing that. If he's starting his business in his own name, he is starting. If he's starting his business in the company's name, company is different and he is different. So now what the judge here does is the corporate veil is lifted and he checks who started the company, how the company is associated with the old company. This is how it goes. This is again a beautiful case. And transfer of property. Myself, a company, okay, I have incurred some loan, okay, I have incurred some loan and I have attached a security like probably if I don't pay this, so there is a non-repayment. If I don't pay this, obviously my security will be taken away. Okay, my property will be taken. So what I do is I form a company. I, in a sense, A company forms another company, B company. Okay, is this B company now a separate legal person? Law says this is the general law. This is how we have to interpret the result. What the law says is once a company is formed, it's a separate legal person. But why this company is formed? Because to protect this property, right? It may look like as if A is protecting, but go for the creditor side, he's being cheated. Okay. So again, a beautiful concept. So this property is transferred only to safeguard his property to avoid sale of the property to Jones. This should not happen in the okay. So this you can go. And state is responsible for the public sector undertaking. So this is again a beautiful case. There is a public sector undertaking in state of Bihar. When we say public sector undertaking, more than 50% of the shares is held by the state. Okay, that's what you call as public sector undertaking. This public sector undertaking was not paying employees salary and wages. Now, who's responsible? Obviously, company, separate person is responsible. But when we say public sector undertaking, more than 50% of the shares held by the government. It's a government company. More than 50% of the shares held by the government. So government becomes responsible. So state is responsible. Here you cannot say it's a separate legal entity. See, in all these cases, we are saying it's not a separate legal entity. That's what the doctrine is about. And transfer of shares for sale of prohibited property. Yes, obviously you cannot do, right? Prohibited, no. So this is also one case. You can please make a note of it. So that's about the doctrine part. So if this question is asked, write short notes on doctrine of lifting of corporate veil. You have to discuss in two ways. One is how the statute says, and another one is what is the judicial decision. And please make a note, if a corporate veil is lifted, is not a black mark for the company, it's a normal process where the court will decide. It's up to the court whether it can lift or not. Okay, if you go for Indian Tobacco Company, ITC, you cannot find the promoters. For each company, there will be a promoter, right? There is no promoter of ITC company. You cannot trace the promoters of ITC company. Then what's the point of lifting the corporate veil here? What's the point of lifting a corporate veil means we need to know what was happening earlier. No, we cannot trace the promoter. So if you want to check the balance sheet and other records of this company, you can please go and check. So this is the problem happening over. Okay. Yes. Can you please just go through this table alone? So types of companies. So based on incorporation, you can classify. This is a major classification, like how it is formed. You have a separate law. Statutory means you have a separate law. For example, even though banks are under the control of RBI and Banking Regulation Act, for SBI there is a separate act. Okay. Registered company follows from Companies Act 2013 or earlier 1956 Act. Charter company like East India Company and all. Like if you go for liability-based classification, yes, we have gone through this already. Limited by shares it can be, or limited by guarantee, or unlimited. Okay. Probably you may ask me how we can find whether it's limited by shares or limited. It will be there in MOA. And we have tables of MOA, you have to follow those tables only. If it is a limited by shares, we have a separate format. Limited by guarantee, we have a separate format. I'll discuss that later. Depending on the size of members, if it is a private company, we're going to say there are only two members, okay, not shareholders, will not call it shareholders. Usually, the company is not incorporated, so there is nothing called as register of members during the time of incorporation. Probably after that only we have this concept registered because the company is not yet incorporated that time. So before that, we'll call it as subscribers only. So there are two persons needed to incorporate a company. After that, two members are needed. Please try to understand. Okay. And for public company, it's 7. OPC it is 1. And there is one particular category called as small company, depending on the turnover. Control is holding, subsidiary and associate. Listing, listed, unlisted. There is something called as you have to enter into a listing agreement. Not with register, not with MCA, with SEBI. Okay, SEBI is coming here. So whenever you come to see some provisions, listed company means SEBI will be there. So it's an agreement entered between SEBI and the company. So it's called as a listed company and unlisted company. Share capital, having share capital, not having share capital. Apart from these are the miscellaneous category where you can call a company as a government company or foreign company, which means foreign company is incorporated outside India. The laws are not India, so completely outside India. Section 8 company, non-profit organization companies, okay, and dormant companies, not presently active. Okay. Public financial institutions, Nidhi company, joint venture company, vanishing company. So it's like dormant company. Why we say it's vanishing means it falls under SEBI. And producer company, where related to agreed comes. So on the basis of incorporation, you can just have a glance, okay? On the basis of registration, Royal Charter Company, okay? On the basis of liability, again, I request you to go through this one, unlimited liability on the basis of members. Yes, let me go for this one, okay? Which company you call as a private company? It follows from which definition? Section 2, clause 68. We call this as clause 68. When a company is restricting the rights to transfer, we have seen that easy transferability of shares is there, but still, when it is a private company, it will be restricting to transfer the shares. Maximum 200 members only can be there. So this is first point. This is second point. And third point, prohibits invitation to the public. It cannot borrow money. It cannot issue shares. It cannot issue debentures to the outside public. Within the members, it's fine. Within the directors, within the members, it's fine. With these three cases, we call it as a private company. If any one case is not there, we call it as a public company. Okay. When you go for this particular restriction, maximum 200 members, the numbers has to be checked whether if any person is joint holders like XYZ put together, all the three members jointly own one share. Please try to understand that one share rupees is 10 rupees only. One share is 10 rupees. So we three buy the shares. How much is my share? 1/3. What is your share? Any denomination. So we all put together equally. 1:1:1 ratio. We buy only one share. Okay. How many members are here? Members may be three, but joint holding is one. We consider this a single shareholder only, single member only. I will get all the rights. But how will be treated? In the case of count of members, I'll be treated as one. We all put together will be treated as one. For OPC, it is not applicable. Why? Yeah, attentive. And excludes when you count for this number of members, employees don't consider. Ex-employees come members don't consider. Okay. Small company follows from clause 85 of section 2. Basically, it's a private company. But why we say it's a small company is because of these two provisions. One is paid up share capital has to be checked and the turnover of the company has to be checked. When we say paid up share capital, not more than 50 lakh. So maximum 50 lakh it can be, not more than. Which means if it is 1 rupee also extra, it will not be called as a small company. Or such higher amount as may be spent, which shall not be more than 10 crores. If you go for turnover, not more than 2 crores or such higher amount. For some infra related companies, it can go up to 100 crores. It depends on. But general provision is 50 lakhs and 2 crores. If any particular mention is there with respect to 10 crores and 100 crores only, you have to consider it. Else don't consider. Okay. Non-applicability, yes, it's a beautiful point. Please make a note. Probably you might be applying all these concepts in your future. If this small company, even though these two provisions are satisfied, if this company is a holding company or subsidiary company or Section 8 company or there is a special act for this company, then you cannot consider this as a small company even though paid up capital and turnover is within the limits. Okay. There is a company called as H company. There's a company called as S company. Okay. This company is holding this company and this is a small company. This S company is a small company. This holding H company is holding this S company. Now we cannot call this as a small company. Even though the paid up share capital and turnover is less than 50 lakhs and 2 crores. Okay, it's end term. It's not or, it's end. Advantages. So what's there? It's a small company. What's there? Usually when a company is there, it has to uh, meet 4 times. The board of directors has to meet 4 times in a year. But for this company, 2 times is sufficient. 2 board meetings is sufficient. And you know about this cash flow statement. When we go for financials, first, if you go in order, balance sheet, then actually it's not first balance sheet. You have this independent auditors report. If you have gone through some financials, please check. You will not find balance sheet in the very first page. You will get all these independent auditors report, that report, this report, all these reports, then goes for balance sheet, then goes for profit and loss account, then goes for cash flow statement. Is that cash flow statement mandatory for all companies? For small companies, not required. Okay. So if you are auditing or if you are an accountant of a small company, don't ask, go and ask for a cash flow statement. They'll not scold you. They'll scold me. Who taught you company law? Okay. Even this question is asked, don't say my name. Okay. You may say I was sleeping in the class. Okay. Shall I go for the third one? One person company. Clause 62. It's a hybrid of sole proprietor and company because when we talk about the sole proprietor business, it becomes his own business. So all the liabilities has to be taken by him. So that's why this company is formed. This follows from 2013 Act only. Earlier we did have this concept. Many nations had this concept. Okay, if you go talk about other companies act laws, other nations, they were following this, but we have this from 2013 Act. This is only point to encourage the entrepreneurship and corporatization of business. See, if you go for this LPG concept, before 1991 and after 1991. So probably you might be aware of this concept. I might have repeated many number of times. Before 1991, everything was under government's control. Okay, from which period? 1950 or 1947 to 1991. After this, many were becoming privatized. Okay, this is still which period? Yes, now also. You might have heard of this license Raj concept, Panchayat Raj, license Raj concept. If you're not, okay, no issues, leave it off. I didn't say you didn't hear. Okay. Now, 2013 Act brings this concept called as OPC. Okay. Okay. Yes, concessions on lax requirements will be given. So you may be asking, ma'am, I'm ex ma'am. I'm going to start a business. There are so much of provisions, and I'm going to follow the provisions which are related to my business, and it's me because business is not different, and I'm not different. But if I go form a company, even though you say it's a OPC, it falls as a private company. What is the privilege I'm going to enjoy from this? Okay. First and foremost thing is liability is limited. You may say, I'll take care of my business, even though it's not OPC. I'll take care of my business. I will know my limits. I will not incur loan and all. So I will keep up my liabilities. I will do my business very safely. Then why I need to convert as a company? So you need to give some privileges, like that's some concession and relax requirements are there. And can be of any liability. Okay, depends on how much you are investing in any other thing. And this one table is so very important. I request you to make a note of this. When we say one-person company, this one implies there will be one shareholder, which means one subscriber, one member, one shareholder, and this shareholder should be a natural person. A company cannot form a one-person company. Even though this one person, there is a wider definition for person. Can you please make it as an assignment? Can you find what do you mean by person? Income Tax Act, it's different. Act to Act, it's different. You go for a general definition of person. You go for a small legal definition. If you go for a person, you just check on yourself. I'll give you a highlight. If you say person, company, firm, everything you call it as a person. When it comes for legal person, it's different. Okay. So, who's this person should be? The shareholder should be a natural person. And not only that, he should be of Indian citizen, resident of India. Whom do you call as resident of India? Stayed 180, more than 180 days in India and should not be a minor. Okay. In case, because he is a natural person, something happens to him. There should be a nominee to take care of his business, and that nominee should also be a natural person, should be an Indian citizen, should be resident of India, and should not be a minor. Okay. And because of this one person company, there's one director enough. For private company, we need to have two directors. For public company, we need to have three directors. For this case, one director is enough. More than one is also okay. Minimum one director. And please make a note of this fourth point. One person company can incorporate only one person company, which means there is an individual X. He can form a company called as XOPC. When it happens to be a one person company, the name of the company will have this word one person, OPC or one person. Okay. So this X forming a company called as XOPC Limited. Okay. Now what happens is if he wants to form YOPC Limited, no, he cannot form. Okay. Yeah. Only one? Oh, okay. Okay, okay, no issues. Let me come here. If this person X is appointing a nominee, Mr. N. Okay. So N is the nominee of this company. Whether he can form a OPC? No. Because if he has the capacity to form a OPC because he satisfies these conditions, if he forms a OPC, in case this X passes away, then what will happen? There will be a clash of the provisions. Is it okay? Fine. Okay. So this one person company cannot form another company and nominee also cannot go for forming. Okay. If he wants to form a separate company, he has to come out from the nomination, then he can. In case X is alive and N passes away, this will happen, right? X may be thinking he is 70 years old. N may be thinking just 20 years old. He may go away first. Okay. Now what happens? There is an option where you can update the nomination. This is what you call, you usually will not use the term updation, you call this amending. Amending the nomination. X is alive, N is also alive, but N is not interested in the business. He wants to step out. Yes, he can. He can just inform to X and X can nominate any other person, A or B or somebody else. Okay. And that person should give a consent. So more about OPC. It's a private limited company. You need to have this word suffix OPC along with the name. Some exemptions are given. Nominee's name has to be there in MOA. Nominee, not only the name, nominee's consent should be there. In case he is withdrawing, yes, he can withdraw. Nominee will become the member on the death of the original member. Change of nominee is possible. And if you change the nominee name, it is not considered as memorandum of association's alteration. It's called as amendment, but you cannot call this as amendment of MOA. Okay. So if we go about MOA, we'll talk about the name clause, object clause, and so many clauses are there. So when we talk about those clauses, there will be one particular clause for one PC company, which is a nominee clause. If you are changing the nominee's name, we are not changing the MOA. It's not amending of MOA. Probably we might be using the term, but we are not amending the. Still, shall incorporate only one company. Minor, no capacity. See, whenever you talk about Companies Act, please try to remember all the provisions of Indian Contract Act. All the provisions of Indian Contract Act applicable. You say when you are subscribing to the MOA, you are actually entering into a contract. Okay, so you have to have the capacity, right? So minor is usually a non-capable person, okay, incompetent person. Uh, Please make a note of this one. This one-person company cannot carry the non-banking financial investment activities, probably including investment in securities and body corporate cannot do. Company cannot, OPC company cannot buy shares in another company. Usually, A company can buy shares in B company, whatever it is. But this company cannot do it. One-person company cannot do it. It cannot convert to Section 8 company also. What is Section 8 company? It cannot convert to Section 8 companies. But if still it wants to convert, it can first convert to private company, then public company, then it can go for getting a license. Actually, Section 8 is the license providing session where central government will be giving the license to the company, saying it can go as a non-profit organization. Because when we talk about company and features, it's a voluntary association for profit. When you go for non-profit organization, non-profit, right? So you're doing a business means we are expecting the profit. And these persons are subscribing, saying that they'll do a business and profit will be shared on whatever it is. But when you go for non-profit organization, it seems like against law. So this should not happen. So that's why central government is giving a license. So it's not a type of company, it's a license given to a company. That's why it's called as a type of company. So Section 8 gives the power to the central government, says it can give a license for the non-profit organizations. Voluntarily convert only after 2 years. Yes. First you're incorporating as OPC means you have to wait for 2 years, then only can come convert as any other company. But if your paid up capital happens to be more than 50 lakhs, average turnover happens to be more than 2 crores, then obviously it will be converted automatically. In this case, it is called as deemed conversion. Deemed conversion. If you're not following all these provisions, you will be penalized. Fine is 10,000 rupees, and for each and every day, 10,000 will be okay. We'll go for public company. Public company is quite a simple definition. Follows from clause 71, not a private company. You remember the private company definition? Restriction, maximum 200 members, and prohibition for the invitation to the public. Free transferability of share is there. There it is. Restricted transferability of shares. Members minimum 7, maximum. It can be, sometimes it will go in pages and pages. It will look like a book. Okay. And now it's mostly, not mostly, all the companies are having in the form of dematerialized shares, demat shares only. So in that case, only the ROM, if you turn over the ROM page, you will find only two names, NSDL and CDSL. Okay, probably about these two companies I'll talk later, probably in another session. We just have a look on these two companies. What is NSDL and what is CDSL related to demat shares. If you turn to this ROM page, you will find these two names only. I'll tell you a bit later, okay? I'm not diverting. Please make a note of this last point. Deemed public company, which company? Subsidiary of public company will be considered as a deemed public company. There is a H company. There's a S company. S company is private company. H company is public company. Okay. Hope it's clear. There is a company H limited. There's a company S private limited. H company by nature is a public company. S company, H company is public company. S is private company. Now, what the law says is we have to consider this as deemed public company. Even though all the provisions are there, or we consider this as deemed public. Okay. On the basis of control, holding company, subsidiary company. So you need to check with the composition of board of directors. If more than 50% of the total voting shares is held by a company, then you'll call it as a holding company. And you'll not consider the layers of subsidiary. Earlier it was like A company holding B, B company holding C, C company holding D. It goes to A to Z. Then after it comes A, B, B. Okay, this should not happen. So only two layers will be included. You can go for this example a bit later. And there is a separate form for this. You have to mention how many layers of subsidiary is there for you. There is a separate form for this. That goes for E forms. Associate company. If it is not more than or less than 50%, but still it can influence the company. Another one company. Which means we call it as significant influence, holding 20% of the voting. Not 20% of the shares, 20% of the voting. Okay. Even though it's not a subsidiary, because we will not call it a subsidiary company. So even though it's not a subsidiary company, we call or we say we have a significant influence. That's why it calls us a associate. Includes joint venture also. Please make a note of it. It's actually from the definition. Follows from clause 6. It clearly says it includes for a joint venture also. Okay. On the basis of listing, shall I continue? On the basis of listing, is listed on any recognized stock exchange. So you are entering into a contract. So when we go for a listed company, it's a tripartite agreement. We have to enter into an agreement. The three parties, tripartite means three parties. One party is a company. Obviously, that should be a public company. So public company. Another party is SEBI, and another party is the stock exchange, NSE or BSE or whatever it is. Okay, that's why we call this as a listing agreement. Okay, SEBI has a very big role to play. Actually, it's happening between the stock exchanges and the public company, but what and all SEBI is asking to do, that only has to do. Or SEBI gets the equal right because law has provided the right. Whatever the regulations it can provide, yes, it can provide. It will be called as a quasi authority, quasi judicial authority, we call it this way. So even though stock exchange is there, if stock exchange is asking any queries, SEBI will be involved. Because of SEBI, only stock exchange is asked. Who is controlling stock exchanges? SEBI. Okay, so whatever the provisions SEBI makes is actually the provisions through stock exchange is given to the public company. Okay, that's listed company. Unlisted means it's not listed. There is no such agreement. Actually, when you go for the listed company definition, there is no such definition in Companies Act 2013, but we go and refer Securities Contract Regulation Act 1956 Act. Okay. And apart from this other company, government company, where 50% of the paid up capital will be held by central government independently or state government and like combination of governments. Okay, can understand. Includes subsidiary of a government company also. Please highlight. Includes subsidiary also of a government company also. Next, we'll go for foreign company. Follows from this definition. Company or body corporate incorporated outside India. Place of business, probably through agent or through some e-mode. They'll be doing a business in India. They have to give the details to our Ministry of Corporate Affairs. Okay, so this is what we call as foreign company. It can be conducting any business activity. Formation of company with charitable objects where the license will be provided under Section 8 exclusively to promote charitable objects of commerce, arts, science, sports, education, research, social welfare, religion, charity, and protection of environment. And more or less, if you go for the financials, you'll get something called as income and expenditure, receipt and payment statement. You'll not have such concept as profit and loss. Okay, so it will be applied this whole profit to promote this object. And the term dividend is the term associated with appropriation of profit. There is no such term profit here. That's why we will not call the term profit at all. And there is no such thing called as dividend. So it prohibits payment of dividend. So receipts minus payments. If it happens to be positive value, which means greater. Okay, after all the expenses, I have some amount pending. I can utilize for my promotions. Okay. Yes, central government's power is there. It's been empowered under Section 8 to give the license. If it is a non-profit organization, there is no need to include like limited or private limited, but it actually has to apply for the license. Instead of registration, you can just use this one. It has to apply for the license. Other things are not same privileges. In case the government thinks that they are, with the help of this company's name, they are defrauding, okay, they are cheating like, or they are not following the objects. They may not be cheating, but the objects are not followed. Okay, so in that case, a return notice will be given by the government, and obviously, when the return notice is given, an opportunity will be given. Okay, probably they'll ask you what's the situation, why this happened. Order of, in this case, order of central government will be, it will be revoking the license. License is given, you're not following it, so we revoke it. Okay, it will be revoking. Or what it will do is it will be amalgamating because all the assets and liabilities cannot be liquidated here. Okay, so what it will be done is it will be amalgamating with another Section 8 company with similar objects. If my area is promoting science, if this company is being liquidated, which means they want to close it, they are revoking, all the assets will be transferred to the same company which is having the same promotion of science or sports or whatever it is. It depends on. Yes, it will wind up. Actually, resolution is a different concept. Winding up is a different concept. Resolution is totally over. Winding up means one process ahead of this one. Okay? One process before, prior to it. So it will be converting its status and it will be changing the name. So it will not be dissolved. It will be wound up. Okay. And if you're not following the provisions, company will be levied a fine of 10 lakh to 1 crore. Director and the officer in charge will be given imprisonment for 3 years. Fine may be up to this one or both. Always, okay, let me give this knowledge to you here. When we go for this penalty provisions, see, when we talk about penalty, we are talking about crime. So we might be knowing we have civil case and criminal case. When it goes for civil, damages or compensation. If it goes for crime, we'll have penalty, which is imprisonment and fine. So probably you might be aware of this one. Okay. Civil case is something happening between two parties. So if company is one party and another one party is there, it's happening between the two parties. So whatever the damages and compensation differs case to case. But when we go for crime, it's a normal provisions follows from Companies Act. As of now, I'm dealing with Companies Act, and that's why I'm using Companies Act. So it will be given with respect to penalty will be given with respect to imprisonment or fine. Okay. When it goes in this case, please check. You can have all these alternatives. Only imprisonment may be there. So only I. Or only I is a very rare case. First, only fine will be given. If that person is not paying the fine, then it goes on. I'm just mentioning all the cases. Or only fine will be there. Or third one, if you're not able to pay the fine or imprisonment. Actually, I cannot decide. Government, there is a judge will be saying this. You pay the fine within this days, or you go for 10 days imprisonment. Okay, எனக்கு அங்க நல்ல சாப்பாடு கிடைக்கும் அங்க போயிடுறேன். See, really, some persons are there. I know because I was working in a law firm also. I know personally. Okay. Then fourth case, fine and imprisonment. Fifth case, fine or imprisonment or both. Please write down also the fifth case. It depends depending on the case severity. Only fine may be levied, only imprisonment may be levied, or both. All these five different options. So whenever you go for reading a penal provision, please be clear what is given. See here, imprisonment 3 years. I'm using a slash because usually all is meant for slash, right? Imprisonment 3 years or fine or imprisonment along with imprisonment fine will be levied or both. Is it okay? This is for director or officer. In case there is an officer in default, if it is a fraud involved, he will be liable under section 447. 447 is a criminal liability section. I request you to make a note on this. I want to have a glance on this. I'll discuss with later. Section 447 is a very famous section. Okay. Okay. Before continuing, okay, let me finish off this one. A partnership firm can be a partner. Usually, when we talk about firm, partners are different and firm are different. There is no such concept over there. Okay, but what happens here is this happens to be a non-profit organization. Partnership firm can be a partner. So if you go and refer the register of members book, partnership firm name will be there. But in other cases, partnership firm will not be there. Partner's name will be there. Okay. This is one extra provision. Usually, to conduct a general meeting, we need to give a notice before 21 clear days. But here, 14 clear days is sufficient for non-profit organization. Non-requirement of minimum number of boards and all. Like we need to have independent directors, we need to have nomination remuneration committee, we need to have the stakeholder committee. There is no such requirement. There is no mandated requirement. Especially if you go for listed companies, it's mandated that you need to have an audit committee. You need to have a nomination and remuneration committee. Okay. All these are not required for non-profit organization. Before continuing for fourth one, I request you to go for a few pages before related to sections. Shall we turn over? What's the page number? 3. See, just go for this two definition. One is officer and another one officer who is in default. This is an often repeated question for CA score. For CA, this is a particular chapter, right? Section 1 and Section 2 is the preliminary chapter of the Companies Act. This is a separate chapter for CA, where one definition will be compulsorily asked. And most often repeated definitions are these: net worth, the one which I have stated in the material. Member, who is a member? Usually these are turnover, free reserve. These are the important definitions. Usually we expect this in the question. So let me go for this net worth also may be asked. Let me go for this officer and officer in default definition. Please make a note of it. It's quite important. Even though you are not directly following the definition, it will be helpful for penal provisions, understanding the penal provisions. When you say officer, who's the officer of a company? Any, please highlight. Probably there may be a case, it will be confusing like executive, non-executive, independent. Don't get confused. Any means everybody are covered. Director, manager, key managerial person, or any person, because of the directions or the instructions of the board are given, they are reacting. So those persons or any or one of the other directors, because they are acting on their instructions, they are following. They will be generally called as officers. So if you go for the penal provision, it will be mentioned directors or officers. But in some penal provision, specific authority will be given to a person who will be called as an officer in charge. If that person is not following the provisions, he'll be called as officer in default. So you have to check whether it's officer or officer in default. Two separate sections actually, 59 and 60. For the purpose of any provision in this act, I have not written in my own words because this is a definition I have to follow from the Bar Act only. So for the purpose of any provision in this act and which enacts that an officer of the company who is in default, okay, this is like normal lines, shall be liable to any penalty or punishment by way of imprisonment or fine or otherwise means of any of the following officers of the company who and all: full-time director, key managerial person. If there are no key managerial person, directors as specified by the board in this behalf, probably they'll be giving their consent in writing. I'll take the authority. So all those persons, okay. And if not specified, if all those persons or any specific person is not satisfied, all the directors, shall I stop here? We just go to till. Okay, kindly join with me. Officer who is in default for the purpose of any provision in this act, wherever you use the term as officer in default, for any provision in this act, which says, max means what? Which says that an officer of the company who is in default, which means what? You find this line, officer who is in default, etc. If you find this line, it says he shall be liable to any penalty or punishment by way of imprisonment or fine or otherwise. Which officers are covered over here? Full-time director, key managerial person. See, these are the major persons, right? See here, when we talk about persons, any director, any manager, any key manager, this was the case. But when here the particular authority is given, so that person, that officer may be okay, hold on director or key management person. Each and every company need not have a key management person. So if so, no key management person is there. When the board is, for example, it's going for a public offer. So what the board has to do is, in a meeting, it has to pass a resolution and it has to name a director who is going to take the authority over this. So the director's name will be mentioned. So if no key management person is there, directors are specified by the board in this behalf. So thus X or Y may be specified, right? Or there may be one person who has himself come out and given the consent in writing. Probably I'll go for this case. If so, that person, okay, if there is no specification mentioned, then who? All the directors will become. Because directors are the agents of the company. So they are completely liable. And company being an artificial person is not doing on its own. What are the intentions of the directors? That becomes the intention of the company. What are the moves of the directors? That's the moves of the company. Now I'll come for the fourth point. I think somewhat it's okay. Now I'll come for the fourth point. Any person who, under the immediate authority of the board of directors or key management person, is charged, which means he is given authority. It can be of any type of responsibility. Probably he has to maintain the records, filing or distribution of accounts of records, or he is getting the authority to authorize, or he is actively participating, or knowingly permits, please highlight, knowingly permits, or knowingly fails to take active steps. He senses that something is wrong in the records. He has to take the active steps. He knows, right? That's why, see, when it comes to the director, it will be knowingly or unknowingly. Even though the director is not aware of it, he's not having the knowledge, he becomes liable because he is the agent. But when it comes for this, any person, we are talking apart from the director because already we have listed about the directors and KMVs before. So when we talk about any person other than or who has given the authority under these persons, so obviously we had Talk about this word knowing. Okay. Now come for the fifth point. Any person. This is a normal point, and I think you can understand. In advice, with whose advice, directions, or instructions, the board of company of the consent to act. Other than a person who gives advice to the board in professional capacity. See, there is an issue or there is a consultancy needed from a CA or CMA, and you are giving your professional with your professional competence, you are giving the idea. Okay, you are saying you can proceed like this. You are giving in your professional capacity. So you are not officer in default. You are handling in a professional capacity. So you are not directly connected to the company. So you cannot be called as the officer of the company. Okay, so this is about the fifth point. And sixth point, every director, in respect of the contravention of any of the provisions of this act, who are aware of such contravention. So I was referring this section 447, right? Whatever the forms you refer, you'll come across this section called as section 447. Section 447 is especially meant for officer in default because it becomes a criminal liability, like. Okay. So, by virtue of the receipt of him of any proceedings of the board or participating in this normal without objecting to the same, he knows something is not going well and he's not objecting. That means this is his problem. Which means what? He is aware but is not objecting. Which means what? He is going along with the crime. That should not be done. In respect of the issue or transfer of any shares, also maybe the share transfer agents or whatever it is, they also will be called as officers who's in default. Okay. Please try to go this definition again and again. You'll have a different view. Okay. Nothing more to discuss on this. So let me continue with this. Page number, yeah, here. So I was discussing, yeah, I have to go for dormant company. Shall I continue? Hope I'm not overloading. Shall I continue? Dormant company. It's a status. It's not a classified company. It's a status. I have started with the project, but I have not started to implement the project. Okay. Implementation is different. I have planned. I need to implement it because I need to collect the source. I need to get all the prior works done. I need to follow all the procedures. So so much of background work is there. It may be taking some 2 or 3 years. So if I mention or if I show my company is an active company, then there will be so much of procedures I have to follow. Again, money matters here. So what I'm doing is I'm asking for a status called as dormant status, saying I'm not active as of now. I'm going to do the business, but not now, but in the future. So it's especially formed for future project. Not only that, I'm a company just holding an asset or intellect. I'm not doing any other business. So I have this IPR. Most of the companies, what they do is they form a separate company for IPR. This is not illegal. Why it is if you have a separate company for IPR, IPR is intellectual property, the copyright, royalty, the separate name only for the company. Okay. The company will not have any other business. Only for holding the IPR rights, intellectual property rights, it will be formed as a company. The reason is it becomes a separate entity, right? If something happens to the business, probably I'll give an example. There's an A company, okay, and another one company B. Okay, I'll go for the live example. Quality was ice cream, you know. Okay, Quality was ice cream is formed by two friends. Let me name it as A and B. Okay, these two persons they started not as a company, just like friendly business they started. What happened is, see, obviously they are human beings. At one point of time, there may be some misunderstanding with the next generation. So many things happening. So they want to have it as a not one company, but as two companies. One company will be manufacturing ice cream. One company will be giving the name. That's a quality. It's not this spelling quality. Probably this spelling quality. So this company is what doing? Is doing what? Holding the name. This company is manufacturing ice cream, and they have an internal adjustment. Okay, what? For this manufacturing of ice cream, I'll take only your name. Or the other way. B company says, I'll give my name only to you. Okay. But and A and B have passed away and it is being carried over by their sons. So you can go for this case. So is the B company active company? Business are not done, but still is active because it's holding its name. In case, this is not the actual case, in case, just for an example, if there is a loss for this company, which company? A company. It goes bankrupt, for example. Okay. Quality was is not bankrupt. I'm just adding some lines. If A company is bankrupt, B company is a different company. It's not affecting the name. If a company goes bankrupt, automatically one process will be done called as liquidation. Now we have a separate code called as IBC. Heard of Insolvency and Bankruptcy Code. Earlier it was complete liquidation, complete winding up process was all done in 1956 and 2013 Act. This was the act came in the year 2019. After that pandemic came, okay, 2017 I think. After that pandemic came, now only it's getting again its existence. If it goes for liquidation, what's liquidation? Liquidifying all the assets of the company and closing all the liabilities. This is what you call as liquidation. IPR becomes the assets of the company, right? IPR, the name quality, becomes the asset of which, in case there is no separate B company. Please try to understand. In case there is no separate two companies A and B, there is only one company A which is holding the rights of IP also, intellectual property also. If it goes for liquidation, obviously what it has to do, it has to sell the name also. Instead, it is now the IPR right is holded by whom or which company is giving the IPR rights? B. If A company is going bankrupt, then this name is not at all affected. Then name is not at all affected. Probably in future you can start this ice cream business with the same name. So it can hold an asset, not only IPRs, other asset also. It can just hold the building. Okay. You know this KMC hospital you have in Trichy, you have in Chennai, Kaveri Medical Hospital. Actually, Kaveri Medical Hospital is a subsidiary company, it's a listed company, it's a very big company. If you go for the holding company, parent company, what is Parvati Nursing, something like that. If you go for this balance sheet, I have done audit for the company. That's why if you go for that balance sheet, under the capital, under the liabilities, under the share capital, it's only 1 lakh. Only 1 lakh share capital. But it's subsidiary company, it's a private company, moreover. It's just 1 lakh having fully paid. Paid up capital 1 lakh means here it's fully paid. 1 lakh capital only, it has such a big subsidiary company. See, seeing a company, we cannot say it's completely very good or very bad company. Like we need to understand the history. So likewise, I'm just holding a building. I have 10 subsidiary companies, all the 10 subsidiary companies running in my own building. Yes, you can. And my intention is to security to give protection to the company by forming a company. To give security to the building. That building may be in crores. Probably I just want to give some figure. That building worth 50 crores. And I'm running business in 10 different subsidiary companies' name. Yes, I can do it. My intention, see, please make a note. Doctrine of looting of corporate will, we were checking that protection of revenue, not giving welfare legislation, or trying to defraud. These are the cases there. But this is company's property. This is company's building. I want to protect my building. Yes, you can do it. Law says it's not illegal. It's legal. You can do it. The smart way of utilizing the Companies Act. It's again a beautiful provision. Actually, we say it's an inactive company because it's not doing any business. Okay. No significant accounting transaction. So what do you mean by significant accounting transaction? Means you go for allotment of shares. Okay. Or you pay some fees to the registrar, the filing fees, this fees, that fees, or related other payments. You have to spend some amount for maintenance of records or maintenance of office, like salary you have to pay. These are not considered as significant accounting transactions. There was one discussion going on. A company is allotting the shares. Okay. How can you say this is not a significant accounting transaction? When your company is incorporated as a company having share capital, automatically once a company is formed, the company has to allot the shares. Once a company is formed, within 1 month of the formation, it has to open a bank account. Probably you might be aware. Within 1 month, exactly 30 days, it has to open a bank account. It has to appoint a first auditor, CA, statutory auditor I'm talking about. Within 6 months of incorporation, it has something like certificate of incorporation. The same like there is one certificate called a certificate of commencement of business. Within 6 months of incorporation, the company, which means the directors of the company, has to file a form for the to the MCA saying that we have started a business, certificate of commencement of business, which means what? The company is incorporated, the bank account is open, all the subscribed capital is now inside the company. We are starting the business. Please try to understand, which means the amount has come inside the company. You start the bank account. The subscribers who promise for giving 1 lakh or 10 lakh or 10 rupees, they are not giving the money. How will you start the business? You're going to, as a director, you're going to say, no, nobody is giving me, I'm not going to start. You cannot say. You go and say to the government, we cannot start the business. If you're starting the business means, obviously what has to be done? The amount has to be there in the bank account. And how the MC is going to believe this? Whether the amount is received in the bank account or not. Simple, don't think too much around it. Attach the bank statement. You say, ma'am, I have 1 crore rupees in my account, ma'am. How I'll believe? Immediately you show your mobile app. See, ma'am, 10000. I believe. Likewise, what MCA says is, we opened a bank account. Okay, we have the first auditor, etc. That's all happening within the month. All these subscribers, their promise will be different. One might be saying 1 lakh, one might be saying 1 crore, whatever it is. They say that we have brought the amount. It's not credited in the bank account. Attach the statement and say we have started a business. Certificate of commencement of business. If a company is not filing this certificate of commencement of business within 6 months, close the company, says the law, says the act. You have to close the company and go. Okay. Okay. So actually, it's not a company by formation. You have to apply to the registrar. We want the status called as dormant status. Inactive company shall also apply, which means it's not only for the company which is formed for future project or holding an asset and all. Even we say that we are not, as of now, we are not running the business. Probably we may do in the future. So we want to make it as an inactive company because if it is a dormant company, most of the filing fees and other things will be reduced. We'll get the privileges. Nidhi companies follows from, is not a by definition. We have a separate procedure for this. Follows from section 406. Actually, what happens here is, I am a person, I have this habit where I collect the deposits from you. Okay, what is your capacity? I can give 100 rupees per month. You might be heard of this Diwali chits and all. I'm capable of giving 100 rupees again. Okay, give. What is your capacity? I can give 500 rupees. Okay, give. My family is big, so I want to celebrate Diwali in a different way. Okay, I'll be going as a joint family get together. Like, so I want to give 1,000 rupees now. Okay, give. You all give. You won't enjoy Diwali. Only I will enjoy Diwali because I run away with them. This should not happen, right? Because whether it's 100 rupees or 500 rupees or 1,000 rupees, hardly earn money. So government wants to regularize this one. So, or not only for regularizing, also to cultivate the habit of this cost cutting. You have to go for the savings and all. That's why this company called as Nidhi company was formed. But actually, what's the requirement for the Nidhi companies? Let me go over here. At least 200 members should be there. Okay. And the net worth funds of the company should be at least 10 lakhs. Getting all this money, what this company is going to do? It should not invest in shares. But instead, because whose money is this? Your money, right? Only the members can deposit, not the public. Only the members will deposit. If you deposit, you become a member. Okay. These amount can be deposited in unencumbered term deposits. So X is giving 100 rupees, Y is giving 1,000 rupees, and so on. All this is being collected by the company called as Nidhi company. This company, see, keeping the amount what the company is going to do, it has to earn money, right? So like you just invest in bank, you deposit in bank, you get a small interest amount. The same like what the Nidhi company can do is it can deposit in unencumbered term deposit, which means like government securities, T6 like how much? Not less than 10% of the outstanding deposit. What do you mean by outstanding deposit? Probably you might be knowing. So if a member comes and asks, you have to give it at least 10%, not less than 10%. And in what way, how it has to be, what should be the interest, everything will be specified in Rule 14 part, not the Act, Rule. And this ratio of the net worth funds, not more than 1 is to 20 ratio. Okay, now come back here, this point. The very and first and foremost highlight is This all will be done within the members only. It's not with the outside. So your money is safe. And one more important thing is, I just want this 2 lakh rupees immediately. If I go to a bank, he's asking so much of questions. If I go and ask my relative, he says, "What is your earning?" He asks so many questions. So what I'm doing is, I have invested in this. I have deposited in this Nidhi company. I directly go to this Nidhi company. I'm a member, so you give me this amount, this loan. Immediately, with no delay, Nidhi company will give, but you have to give some collateral. This is the only thing. So it will be receiving deposits, and that money, one part will be used for in the depositing for encumbered deposits. Along with, they'll be lending themselves for the mutual benefit. Okay. But obviously, there are central government rules, because when you go for deposit or money, banking rules will be applicable, and so many things are there. So you have to comply with the central government rules. It have to register by SEBI and Companies Act. And you might have heard of this name: Permanent Fund Limited, Benefit Fund Limited, Thrift Fund Limited. You can use this name. Okay. Okay. Public financial institution. Shall I take over? Public financial institution, in short, call it as PFI. These also collect money, but will not call it as deposit. Instead, LIC premium and so on. So LICs, IDFCI, UTIs and all, and some other institutions which may be notified by central government, and others in consultation with RBI, it will be reflected. Okay. And condition, it should be established and constituted under the central or state tax. It's not uh, it should not be like a private company and all. Public financial institutions are big, and it should be a government company. Okay. Shall I go for the seventh one? Joint venture companies. Under a joint arrangement, joint parties will have the right over the net assets and arrangement. Each will have its own competence. Okay. So we have this around 1,20,000 companies registered each year. Producer company, you have to look after for objective of production or harvesting. You procure or you do some grading work. You're not actually harvesting rice paddy and all. You're not harvesting, but you buy the rice and you go for grading alone. That's also called this producer company. Because when you go for grading, you have to do some process. You need to check whether this is first quality rice or second quality rice. We need to do some scientific process, right? Probably if you ask your mommy or grandma, touching the rice itself, they'll say, what type of variety is this? And touching the rice and knowing the color itself, they say, how long it will take for cooking and all. Okay. So grading, pooling, handling, marketing, selling, export of primary produce, everything will be covered under producer company. And one more highlight is, only a producer company can be a member in producer company. Okay. You cannot go and invest in producer company. Okay. Vanishing company. Actually, vanishing is a word related to listed company. Why this means, actually each and every year you have to file the annual returns with the ROC. ROC is a register of companies. But when it happens to be a listed company, you have to file the returns not only to ROC but also to the stock exchange. If failed to file for a consecutive, please highlight, consecutive means what? Continuous. 2 years. If you have not filed for 2 years, and not only that, not filed for 2 years, and you're not maintaining your see, when you go for incorporating a company, you have to give a address called as register office, where you are running this company. What is this? If we want to sell the service of notice, where it has to be sent, everything. So it's an address for the company. You're not maintaining the office that is a register office. So there may be some random inspection coming with the address notified, with the ROC and the stock exchange, and none of its directors are traceable. So 3 points. One is not filed. Second is not maintaining its register office. Third is we are trying to trace the directors and nobody are traceable. In this case, it happens to be a vanishing company. So vanishing company by default will be a listed company. Okay, this is about vanishing company. Yes, so that's all for today. Next class we will discuss on registration, incorporation, MOA and AOA. So again, the next class is going to be on basics only. Okay, MOA and AOA will talk more about doctrines.